Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, July 1st at about 1 p.m. Eastern. Okay, here we are on the first day of the third quarter of the year. This morning, the Institute for Supply Management, known as the ISM Index of National Factory Activity, dropped to 53 last month, the lowest reading since June 2020. And down, I should say, from 56.1 in May. Its measure of new orders contracted for the first time in 2 years. And on that note, let's go on to 3 charts that could give us some insight into the week to come. Well, we've been having quite a time, haven't we? Okay, this is a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the ETF that closely follows our benchmark index, the S&P 500. So this is the S&P 500 SPDR. Again, this is the ETF, symbol SPY. And as I captured this chart today, the SPY was trading at $375.67. And that is 21% below the SPY's last all-time closing high, as you all know, back up here in January at $477.71. Now, basically, we've been moving in a downtrend since that January high all the way down into the month of March. We perked up in March here, and then the SPY started down again and then started falling really dramatically down. We bounced back up here a little bit at the end of May, and then rolled over and dove really hard in the first part of June. Now, the recent pivot high that you can see right here is at about $393, with the prior low down here on June 17th at $362.17. So a definition of a downtrend is lower highs and lower lows, and we've definitely had lower highs and lower lows, especially since that March high at about 462. So we've had a couple of real dumpster dives here, and I've drawn channel lines for you. And as you know, right now the SPY is trading below the 200-day moving average, the black line, below the 50-day moving average, the green line, and certainly below the 20-day moving average, the red line. Again, so we're sitting right now at $375.67. Now we have this May 20th low down here I just mentioned at, not May 20th, June 17th low is what I meant to say, at $362.17. So what we need to do here as we're coming into the end of the day today, going into next week, we need to do this one more time, and we've been doing it for a lot of the year. We need to mark this low, which is 362. We need to watch price and see if it's going to come down and retest this low at 362, as all these lows have been tested before, and then some of them pretty well decimated. What we need to see here is that the SPY holds at 362. If it does not do that, we could see, as you know the drill, we could see another leg lower. If, however, we manage to stop here and the SPY starts back up, bottom fishing is, we've been trying it for actually the last few months here. Bottom fishing can be a very tough thing to do because nobody on the planet, me or no one else in the world, knows where the lows are going to be until they happen. So we do need to watch here. 362 is the line. Below it, maybe another leg lower. If it starts rising up a little bit, just think of it as a relief rally. Nothing's in stone in a rally until we see higher lows and higher highs. So please remember, trade what you see, not what you think is going to happen. Our next chart here is a daily chart of the Invesco QQQ, symbol QQQ. As you all know, this is the ETF that closely follows our Nasdaq 100 index, very important index in the markets. And in it, of course, are all the big momentum stocks, the Apples, Amazons, Microsoft, Alphabet, Facebook, Netflix, that whole group. Now, when I captured this chart today, the QQQ was trading at $278.01. That is about 31%, definitely in bear market territory, about 31% below its all-time closing high way back here in November. So definitely in a bear market, the QQQ is and has been for quite a while. What I do want to note here, though, definitely below its major moving averages, I do want to note here, though, I did draw a channel line over the recent highs. And of course, I drew a line or a trend line, channel line, whatever you want to call it, down here under the lows. What I am seeing here, though, and it doesn't mean it's going to happen overnight, and it may take 2 or 3 weeks, nobody knows, but this is starting to form a falling wedge. And that could actually, at some point, even be a positive pattern for the QQQ. Again, we're not noticing anything right now. We do have these lows to watch here at 269. Right here, the low is 269 on the QQQ. That is the number we want to watch in the coming week. Again, we're at 278 right now. And the reason we follow these indexes at all is because the majority of stocks follow the S&P 500 and the Nasdaq 100 or the QQQ higher or lower. That's why we watch them. They're kind of like, you could say, crystal balls. So if we can hold here, if the QQQ can hold here at 269, then and bounce back off of it, then we may see, who knows, a leg higher. Sometimes we call them a tradable bottom, meaning we don't know if it is the bottom, but maybe get into kind of a short-term trade with stops, hard stops with your broker. So all we can do now is be patient and wait for the coming week. And this is a difficult market to trade. So in times like this, please remember, it's not how much you earn, it's how much you don't lose, especially in a market like this. Okay, our final chart today is a chart of the Invesco Dynamic Biotech and Genome ETF, the PBE. This is a daily chart. Has 30 components. The top components are Catalent, Vertex, Biogen, and Amgen. So I liked this pattern. Healthcare has always been a favorite of mine. That doesn't mean that the ETF is going to obey us by any stretch of the imagination, but I like the pattern, so we're looking at the PBE right now. Now, just for your information, it's not on this screen. The PBE made an all-time high at $84.86 in February of 2021. We had a lot of highs in February of 2021. Now, we can see the November high on this screen. Back here, look left. That was at about 77, and we can see that the PBE fell from there down underneath its major moving averages, rallied back into the end of the year here of 2021, then rolled back over in 2022, fell dramatically from January down to the bottom here, right along $56, somewhere around there, rallied up, then kind of moved in a sideways motion here, moved into a triangle, broke out of that triangle over the 20-50 day, rallied up and looked like it was gaining some steam here, but rolled down again in April, fell through that low here at about 55 and change, fell through that, it fell down to the lows here. When I captured this chart today, again, the PBE was trading at $56.32. Now, it made a low in May at $51.82 back here. I want to look at this because this is a decent looking double bottom. Then it rallied up, so call it 52 if you want. It rallied back up to the 50-day moving average. Look, it could not go over it. It fell down, tried to go over the 50-day again, could not go over it. Okay, that tells us that the 50-day is strong here. Then back down to retest about $51, $52. Rallied back up recently. in the last couple of weeks, and again now is trading at $58.40 above the 20-day and 50-day, still below the 200-day. This is what I'm going to do. If in the coming week the PBE stays above, here's the number, $56.50. If it stays above $56.50, which is just a few cents above the 50-day moving average, the green line, and if the market is relatively calm, please do know that biotechs don't always trade with the market. They kind of trade on their own. But if the market is relatively calm and if the PBE can stay over 56.50, I will buy a small position of this ETF, and my stop will be a hard stop placed with my broker at $55.90. You can see I'm in no mood to lose a lot of money here, and I'm not going to do it. Okay, so those are my numbers. Above 56.50, stop at 55.90. If and when the PBE can rise above this high right here, if it can rise above it and close above $60, I will add to my position, and of course by then my stop will be a trailing stop. So you might want to keep an eye on the PBE in the coming week if the market shows any positivity at all. Okay, so now please know that this is the perfect time to invest in yourself, especially if your things have slowed down a little for you here. Take a few minutes to check out my online training programs and see how you can become a better trader. These programs include our flagship training, 7 Steps to Successful Trading, how to swing trade successfully, a really good thing to learn in this market for bottom fishing trades, how to trade the trend to profits, which is going to be golden as soon as this market starts back up again. 3 winning setups and how to read charts are for novices, and they're very good. And of course, the one that's going to be priceless as we move into the bottom of this market, how to bottom fish like a pro. These programs are timeless, and they can help you increase your gains easily and quickly. To see all of my online training programs, simply go to the link on this screen right up here, or easier still, click on the orange button below. Please be careful out there. Have a wonderful 4th of July weekend. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.